Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. in the United Arab Emirates, and it is February the 6th. It is Friday. It's the last day of trading in this week. We have Brent crude oil trading up this morning in Asia, up 1.25% at $68.39 a barrel, where it's kind of been for the last number of sessions, bouncing between above $70 close on January 30th, and since then sort of between 65 and 70, up and down the ladder, depending on the news headlines overnight regarding the probability of the US attacking Iran or not attacking Iran. And there lies the quandary for the markets and maybe for the whole world at the moment. Let's start off close to this particular reality. Obviously, Robin Mills, CEO of Kamar Energy, based here in Dubai. Robin, how do you read the tea leaves on all of this? As we get closer to Ramadan, as we sort of start to run out of weekends, typically the window in which strikes, whatever geographies, seem to be taking place. What's your sense of where this is all going?
Well, still cloudy, of course, and we just obviously get the usual mixed messages from the US of exactly what they're looking for. I think the most likely case we're in here is there's kind of backwards and forwards on negotiations, and both sides trying to disguise their true intentions. But I think there's some move from the US to do a deal, which maybe on the nuclear side, and Trump can say, "Look, I did a deal that was better than Obama's. Probably it will look very similar to Obama's." And then, case closed, I solved another war and move on to something else. That's kind of the ideal case where there isn't any real military action, and Trump can say that his threats and his pressure got a result. And the Iranians give away something that they can easily give away. If it was all damaged in last year's attacks anyway, then perhaps they're not actually giving up much. That's the most optimistic possibility. The US may feel the need to throw in something on the missile side and get some action for Iran on reducing its missiles. That'll be a harder ask. And obviously, the more worrying case would be there is some military action by the US, which could be stuff that doesn't affect the energy side at all. Could be strikes against nuclear facilities or missile sites. But it could be something wider, particularly if the Israelis get involved.
And I mean, from the point of view of the wider regional context, obviously early doors with this latest flurry of diplomatic and discussions and headlines. The UAE and Saudi Arabia both very publicly came out saying that they were not going to be facilitating anything regarding attacks on Iran in terms of airspace and sea space and so forth. Where do you think the influence on these events is from the region? How much does that have a bearing or not on the sort of wider US-Israel agenda?
Well, I think, look, the GCC and specifically UAE and Saudi Arabia and of course Qatar want to stay out of this and want to make sure they're not any targets of retaliation. But it would depend on what exactly happens. I mean, if missiles are flying across Saudi airspace on the way to somewhere else, then the Saudis, I'm sure, will allow the US to try and shoot them down. We'll say that that's a defensive measure, not an anti-Iran measure. So I think there's still quite a bit of room for interpretation within this. But look, obviously, that there's an intention for the GCC to make sure that they stay out of this and that their oil exports and energy facilities are not targets of any kind of retaliation. And I think the attack on Doha last year, well, the two attacks, because one by Iran, one by Israel, were quite a big shock.
Caroline Bain, founder and CEO of Bain Commodities, sitting in the UK today. Caroline, your thoughts? I was widen out the lens a bit. Obviously, the immediate impact on the expectation of an attack or not on Iran has moved the oil price up and down a few dollars. But ultimately, there's a wider market context here. There's a well-supplied market. There's some fragility on the demand side. How do you see this fitting in to the wider macro trends on the energy markets, and what is the weighting that this particular event has versus the much greater sort of weighting of global sort of GDP growth and other basic stuff.
Yeah, I think it's been quite interesting, and not just at the current time, but over the last couple of years, really, that we haven't seen the huge spikes in the oil price associated with the risk of conflict in the Middle East that we used to see. And I mean, that's obviously because far more oil is now coming from the US than was 20 years ago, and arguably the Middle Eastern supply isn't as critical. I mean, it is still critical, but um, I think I agree with Robin that I think and hopefully it's not going to happen, but if there was any military action, that there will be an effort not to target energy infrastructure. We saw that a bit last year with the Israeli attacks and the US, partly because the US is so keen at the moment to keep a lid on oil prices. So
with all that's going on in the UK and in Europe, Epstein and all sorts of other things, obviously the war in Ukraine, is this, when you say we would have in the past seen events like this to be much more turbulent for the markets and for the oil market in particular, but is it even getting onto the front pages in Europe? Is it a big story to even break through all of the other noise?
Oh, definitely on the front pages. Uh, I think no, I mean, there's no question that if there was any US military action in the Middle East, it would be the biggest story globally.
It would even take Mandelson off the front page of the Daily Mail.
That would be quite nice.
I would wonder about that, but we'll see ultimately. Clay Siegel, great to have you on today. Good timing, as obviously Clay Siegel, Senior Fellow, and James R. Schlesinger, Chair in Energy and Geopolitics at CSIS. Clay, obviously you're in UAE at the moment. You're obviously based in the US, and you bring very unique insights in both geographies. On this event, first, the developments, as I say, we close out the week. Oil prices still looking for some direction on this Iran story. And I'm wondering from your perspective, from a US perspective, which I'm wondering, are we likely here to see a Trump administration Venezuela structure, get rid of the leadership, as they did in Venezuela, arrested the president and his wife, took them to Rikers Island, and kept everything else in place. Where is the sort of wiggle room or scale of opportunity that Trump has here to push over that first domino, unknowing how it might fall in an election year and all of the other issues he's dealing with in MAGA land?
Good morning, Sean. It's great to be with you here in town. Well, we are obviously in a situation where President Trump is utilizing energy as leverage, first of all, against a series of adversaries, and also in bilateral dealings with non-adversaries as well. And so when it comes to sort of the parallels between Iran and what we saw recently in Venezuela, I think it could serve, at least directionally, as a bit of a case study. In other words, the idea being to employ energy as leverage in order to force political changes at the Capitol and within that government. And so the idea, of course, is that Trump is enamored with the sort of the very short duration, brilliant tactical military type operations, special forces and long range bombing and bit like that, without really undertaking more classic kinetic campaigns. And I use the term campaign because they can be relatively long lasting and, of course, incur damages and casualties. And so that probably is the direction of travel here with regard to Iran. The president has.
I suppose a lot of that depends, Clay, sorry to interrupt, that whether the Iranians perceive this as existential. We did see last year this sort of choreographed, I'm going to now attack you and you're now going to attack me, and my missiles are going to be in lane 8 and yours are going to be in lane. A lot of coordination in what was a kinetic conflict. This one feels like, a lot of the outcome depends on whether the Iranians perceive a choreographed dance here, or a existential threat?
Absolutely. And I think it's important to remember that both sides have basically moderate scenarios with which to approach this conflict and also more severe scenarios. So, on the moderate side, and this is kind of the base case that I'm expecting, is for the United States and Iran to not exceed beyond sort of harassing each other's, let's say, shipping, transportation within the region, and not to escalate to targeting, damaging, even destroying facilities. I don't see that in the cards. And to Caroline's excellent point, I mean, President Trump is very sensitive to domestic fuel prices in the United States. It's almost inconceivable to believe that Washington would set out on a reckless geopolitical course in this most important region of the world for energy and the economy, with the potential for spiking oil prices, let's say, to levels that we saw in 2022 after Russia's full invasion of Ukraine, when we had easily $125, $130 a barrel Brent, and notably record high United States gasoline prices, more than $5 per gallon average in the United States. In some places, they were much higher. Quite a precipitous moment to undertake an op that could lead to an outcome like that, I think.
Robin, in the scale of what's on the menu here as options, and we've been articulating them, and Clay very well presented the ideas there. At the very least, one would think this idea that there might be lower scale disruption of shipping and pick prints, if you like. But what we saw last time in the first administration of Trump, and the full sort of maximum pressure, as it was came known as, there was quite a success without there being kinetic conflict to fully sort of restrict Iran's ability to export oil to the scale in which they've been able to do in the last few years under Biden and under Trump, relatively unrestricted exports and flow of Iranian oil. Is that at the very least at stake here?
Well, I think that's certainly one obvious angle for pressure, and that was used against Venezuela, of course, actually intercepting tankers on the high seas, and that's a much more aggressive move. Or, of course, ramping up the sanctions pressure in general. There were some moves against China earlier, sanctioning some Chinese buyers and some Chinese terminals. Not that major, really. I think more of a signal, or more kind of housekeeping. Oh, here's another 7 companies we need to add to the usual list. But there's always the possibility of ramping that kind of pressure up more significantly. But as that happens, of course, the risk rises that the Iranians retaliate with attacks on tankers, let's say. And we've seen with the Houthis in the southern Red Sea how even a relatively small number of attacks with quite unsophisticated weapons can shut down shipping through a major waterway. I don't think that would happen in the Gulf. I think it's too important, and there isn't an alternative, but it would certainly deter shipping.
Is there alternative
premium and so on?
Is there alternative from the point of view of supply? I mean, the ability to contain supply. I mean, the Red Sea is certainly the disruptive zone, but at this stage, the world has adapted to going around the Horn of Africa. Flow is really uninterrupted from the point of view of supply from Russia and elsewhere. Containing 1.5 to 2 million barrels of Iranian oil, obviously 99% of it going to China. Is it possible to contain that at this stage, or have they mastered the art of getting around it as well? Or is there other OPEC barrels available to make up for what would be a 1.5, 2 millions coming out of the international markets?
Well, look, there's plenty of spare capacity if it's just the Iranian barrels that we talk about. If there's a very aggressive sanctions move, if there's interceptions of tankers by the US, if companies get to the point that they daren't risk touching Iranian oil, then yes, I think most of that oil could be taken off the market. And Saudi Arabia, UAE together, a little bit from Kuwait, Iraq, all of those could fill in for 2 million barrels per day. Yes, that's not so much of a problem. Prices would rise because spare capacity would then be quite low, but the gap could be filled. But I mean, I think the point is the Iranians can't tolerate that. They can't tolerate having their oil supplies cut off entirely. So they would react in some way, and depending on how desperate they get, that could be more and more hostile. I think that's more the risk. So I think what you could see is a pressure to say, let's reduce Iranian oil exports, but not to zero. Bear in mind, during the COVID period, they were down at about 200,000 barrels per day at the lowest period. Of course, there was other stuff going on at the same time. But Iranian oil exports can be cut, but not to zero, as part of putting pressure on them. I mean, the economic situation in Iran is very tough as it is, even with the current exports hovering around 1.7, 1.8 million.
Caroline, I wanted to get your thoughts on where we see oil in the commodity complex. Obviously, we're seeing a lot of turbulence on the metal side in the last week, after we've reached these massive highs on copper, silver, gold, etc. But also now turbulence in the AI universe in terms of financial markets, the outlook there, the long expected sort of ceiling on AI expectations being met. With the wider financial market turbulence, is it a play? Does it have a role to play here in where A, decisions make to buy on the geopolitical side, or B, where supply and demand fundamentals go in the coming months?
As you say, we have seen a lot of turbulence in metals. I think that
We also saw overnight, there was yesterday or the night, I think it was yesterday, the US report particularly weak jobs numbers, that unemployment there climbing.
Yes, I mean, the US economy has probably been more resilient than we thought it could be, given the sort of erratic policy making we've had over the last year. A lot of that, though, has been related to AI and the tech industry. That's also been a factor playing into the strength of metals, because metals are absolutely vital to technology, infrastructure, and software, etc. I think what we've seen is a bit of a bubble in the metals, despite the fact that the medium-term outlook is very positive. They seem to be coming off the boil, if you like, at the moment. By contrast, there's been a very negative sentiment towards oil, which I also think has been a bit overdone. If you look at oil demand, it's not falling off a cliff. It's actually sort of growing, not very strongly, but it is up a bit. And I think some of the sort of consensus about this massive surplus appearing in the market is overdone. Demand is surprising on the upside. And we have these very real supply risks, not just in Iran, but globally. So I'm probably a little less negative about the prospect for the oil price than most.
So just to pursue that a little bit more, this current oil price, mid to high 60s, you see a lot of support in that price from just the fundamentals of demand and economic outlook rather than the geopolitical stress of the moment. Last week it was Greenland, the week before it was Venezuela, now it's Iran, but ultimately the fundamental floor here is being delivered by demand.
Yeah, I mean, I think to go back to your sort of initial point about, or initial question about the global sentiment, and I think we are definitely seeing investors moving into more physical, real assets. There is a feeling that some loss of confidence, if you like, in the US Treasury market, in the US dollar, which I think is going to benefit all commodities this year. I'm quite positive on the outlook for most commodities.
And eventually oil in that box as well.
Oil has to be in that box. It may not perform as strongly as copper, but it's definitely a real asset that will appeal to investors this year.
Clay, looking at this sort of wider piece here, when you think of year one Trump, and obviously we don't need to repeat the scale of turbulence that has been in terms of not only headlines, but face-offs and tariff wars and so forth. But now year two, I mean, we all know how sensitive he is to his ultimate scorecard being the stock market, and that essentially tells whether he's doing a good job or not. And so his willingness to turn over the bus a bit is maybe less as we go forward than it was in year one. The November elections become more concentrated. We saw the deal with India. And so forth, his urgency to get the government shutdown this last few days to be over. Have we reached peak turbulent Trump, and we should interpret and read the tea leaves on these different moments with a slightly more sober Trump administration outlook?
That could be a tricky bet. What I would offer is that I think lessons are being learned and internalized along the way. And the biggest lesson related to oil from that first year that we now have under our belt is the limits of policy changes when it comes to that physical market, and particularly enticing greater oil supply increases. And so I think the president came to office hoping that that aggressive program of deregulation, lease sales, opening up federal lands and waters would cause United States operators to really ramp up supply. That's not what happened, probably predictably so, because as many of our audience will know, it really is the investors and largely Wall Street that are determining how those operating management teams are rewarded. And it's not for production growth per se, it's for profitable returns. And to just kind of bring this full circle to kind of the 1 year anniversary of this term starting, you had just recently no less than Harold Hamm saying that they were going to stop drilling in the Bakken of all places, like kind of the crown jewel of that of his portfolio, and because it's not profitable. And so if you think about applying those lessons learned to other places, there was a little bit of a reckoning in the White House, the Oval Office meeting with the the energy executives a few weeks ago, because we heard a portfolio or a spectrum of interest and enthusiasm for Venezuela, and it comes back to the same thing: is it in these companies' investment time horizons likely to be profitable or not? And so from majors and international oil companies, big concerns as expressed by ExxonMobil, which actually used the term uninvestable, at least for the time being. That was before this new hydrocarbon law and also before some of these new licenses that have been granted by Treasury. There's still one big one yet to come that we're all anticipating for the upstream side in Venezuela. So I think the lessons are being learned and internalized. And to bring it also back to Iran, the idea is the administration has had this policy of so-called maximum pressure. And it even says in this presidential memorandum taking Iranian exports to zero. I mean, that hasn't happened at all. And to Robin's excellent point, there have been some facilities and some entities that have been sanctioned along the way, but really not moving the needle lower. Maybe Trump would consider what we've seen recently in Venezuela with the quarantine and actually taking hold of the oil sector of an OPEC nation as paradigm for the future. It's possible.
Well, certainly if you consider what is the actual target here, is it Iran's mullahs or is it Chinese access to cheap oil? And then one makes a judgment as to what policy you put in place for that. Let's go to the survey question, which is addressing what we've been talking about here, is really about how this plays out. What is the most likely outcome of Iran-US diplomatic talks, which again are happening today? I mean, they seem to be moving between Oman and Abu Dhabi and Turkey. And is this going to lead? We've had different scenarios outlined by you guys, and it seems that everybody's sort of articulating the sort of least draconian outcome here. It's more going to be the failure but lead to containment rather than failure leading to full-scale war? Or is it failure leading to U.S. targeting Iran leadership like we saw in Venezuela? So I'm asking here what we think the outcome here is. How do we read the tea leaves? Reach agreement and a sort of a peaceful pathway forward, which in itself could be quite bearish in terms of opening up the oil industry of Iran, as we're seeing attempts to open up the oil industry of Venezuela. On to Iraq, which is what I wanted to talk about with Robin. We're mentioning there Clay is referencing, Robin, the idea of whether oil companies are going to be taking up the opportunity to go into Venezuela or even to go into areas in the US, i.e. put money in the ground to extract more supply at a time in which prices are low and the outlook is more of the same. We've seen in recent days reports in Iraq, BP seeking a partner at one of its oldest, one of the oil fields in Iraq. We see Lukoil selling its stake, selling off its assets. Chevron looking at some assets there. What's the situation in Iraq as to why it suddenly seems to have resurfaced? We've had these moments before where IOCs have been uninterested in Iraq, tried to get out. Now it looks like they're trying to get back in again.
Look, I think there's been a general move by the IOCs to say, look, we do actually need new opportunities. US shale is slowing down, and we need to rebuild our international portfolios. And you'll see them going back into Libya. There's a lot of appetite for Libya right now, another kind of tricky place. And Iraq, the terms have improved significantly. Fiscal terms are acceptable anyway. And the government under Soudani, of course, we'll see if Soudani comes back as prime minister, but on the whole was quite successful in giving out projects. Big Total deal for the Ratawi field, and then the BP deal for Kirkuk. And now the negotiations over, as you say, West Qurna 2, and maybe Exxon will come back into Majnoon, and maybe some other things. So, that Iraq is a lot more open, and particularly for Western business. There was a big push by the Iraqis to say, look, we've got too dependent on China. The US has made it very clear that they don't want more things going to China, so we need to bring in some Western.
But Iraq has always been pretty tight on the fees they've been willing to pay. A lot of companies have been running, like Exxon went off to Guyana and had a very lucrative opportunity there. Less so is Iraq willing to put more money on the table for the IOCs?
Yeah, the new terms that are being offered are a big improvement, and you see that in Exxon, which walked away from West Qurna 1, of course, only a couple of years ago, and is now willing to come back potentially into West Qurna 2 or Majnoon. So the new terms are, they're not great, but for such big fields, they're a big improvement on what was given previously.
Looking at the situation in Europe, Caroline, the idea that in the aftermath of it seems so long ago, the whole drama around Greenland, and I know it's only a week or two ago. Is there any greater shift? I mean, there's been some narrative emerging again, a bit like the point there that Robin mentioned, Iraq becoming too dependent on China, the US not being happy with that, and now Europe becoming too dependent on US. Because of the deals they've made around the LNG, they froze the trade agreement and reviewing some of these. Do you expect anything to materialize there, or we're too deep into this full dependency on US LNG?
It's hard to see what alternatives Europe has really at the moment. To US energy. There are obviously concerns because relations have deteriorated to such an extent, but I think ultimately Europe can't go back to importing from Russia in the current situation. So I'm afraid I don't have much hope for Europe to reduce its dependence on US energy.
Clay, last word to you on that. I mean, when we look at the opportunities for international oil companies, there's no shortage of them, and now there's Venezuela, and who knows what's going to happen. I mean, one of the outcomes in Iran could be a bonanza of opportunity there. There's massive gas reserves that have yet to be tapped for international markets. Obviously the oil industry there is still in much better shape than Venezuela, and lots of opportunity. Iraq, we've mentioned. The outlook for attracting IOCs, where does that look like to you from the point of view of new supply coming? That these are all new opportunities, but there ain't great appetite to put dollars everywhere and jeopardize the oil price further.
Well, that's right, and there's also the discipline that is basically ruling the day when it comes to capex plans, and we heard some of this in the recent earnings reports. But I think that too, like the best kind of framework for thinking about it is what you heard from the executives in the recent White House meeting. I mean, there are a myriad number of items on the list for evaluating opportunities to add to a global portfolio, but the must-have at the top of all these companies' lists is a credible roadmap to durable political stability. That's why it was so important in Venezuela, because there's still a lot of work to do there. Certainly, it's alluring to think about opportunities for the energy industry in a place like Iran in the future, which it's been shut out of largely for a long time, at least in the West. But we are certainly, to use the American baseball metaphor, I mean, only in the first inning, maybe, of thinking about a future like that. And political stability is foremost on the list for any consideration.
Well, we'll have to wrap it up there. Political stability, rare commodity these days. The view in this room is fail lead to U.S. containment, getting most of the attention, and reach agreement peace is coming up on the inside with some hopeful support. But good to see, at least in this room, that number 4 isn't getting any backing. So we can maybe go off to our weekend and rest easy that we're not going to be woken up tomorrow morning here in the Gulf with as we have in the past. Thank you, Robin Mills.
This visitor is happy to see that result.
Yes, who has to get a flight to go home, obviously. You don't see... There was 2 weeks ago, you've heard the noise around European airlines closing down flights, I think KLM and Air France maybe, and others. You don't seem to hear the same thing at this weekend, that there is any concerns immediate. Maybe the wolf has shouted a few too many, the boy has cried wolf too many times on this. Robin Mills in Dubai, thank you. Clay Siegel also here this week, and Caroline Bain in the UK. Thank you so much for your time. Have a great weekend, everybody. Oil popping back and forward between 65 and 70. Hard to see that changing unless dramatic events happen over the weekend. All the best.